Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on Forex market. So yesterday was a bit dramatic type of action. So initially it was reaction relatively mild, but later this market has shown a bit greater spike on intraday charts. That's the reason mostly, guys, why I prefer to not hold the position when I have the Fed minutes, Fed meetings, central bank statements and so on. It would be better to take position maybe a bit worse price, but when you will have the all information concerning the possible action and the data will be on the table. So on the euro currency, you probably might be a bit frustrated and or maybe disappointed that actually performance here, as we are mostly watching for downside reversal, it looks not as bearish as we would like to. So of course we prefer to see some big downward action, forming immediately some strong bearish pattern that just takes out all the questions concerning the entry and the overall dynamic. But here we have to say a few things. So first of all, concerning the fundamental background, we will postpone it to our weekly report. It's a lot of stuff to discuss actually. I will try to keep the report as short as possible, but really few important moments exist. So particularly speaking, guys, currently by the end of this year, we're coming to the end of very important and I would say epic stage in overall global finance. Actually, central banks are coming to the point where the major hiking spiral is already mostly ended. As Fed, European Central Bank, maybe it could, but in general, all central banks currently stands at the point where they can't support the same pace of the rate hike. Mostly they are turning to the stage of the just observation and monitoring of the situation. What this monitoring could lead us? By our suggestion that somewhere in the March and April, since we do not expect any drop in inflation, significant drop, so it could decrease a bit, but in general it will be about 6%. Fed starts watching and actually recognizing the evident signs of the economy weakness. So you will see this weakness not in some statistics and reports, but you will see this weakness in the stores, in the jobs, and then on the real estate market. It will be very evident. And this will be big question to the Fed. So they can't start easing because inflation will be relatively high, but they also can't keep going higher. European Central Bank now stands even in a worse situation. It's because inflation is 1.5 times greater, but rate is 2 times lower. And European Central Bank has even less limits to make further hiking steps in the interest rate. That's why by taking a look at this performance that we see currently, do not to be deceived and make really too hurry conclusions. I think that this performance that traders were trying to push in euro currency high based on a statement from the European Central Bank, this is self-deceiving. The fact that is coming from the Fed, from the European Central Bank, you could confirm very easy. So for instance, just take a look at the cable. Bank of England also has increased the rate, but you do not see this performance. Market just collapsed in favor of the dollar, despite its rate also has been, the gap between the Fed and Bank of England has been narrowed. Anyway, you can see this action. On the gold market, that will today also will take a look at a bit later, next video, you can see collapse, no reaction on the European Central Bank meeting. Now, let's take a look at our favorite dollar index, what has happened. We already talked about this, take a look. Free drive buy grabber on the bottom. Another grabber has been formed. Both these patterns suggest taking out of this top. It means this upward action on the dollar will continue. So in general, recent decisions mostly stands in favor of the dollar, because indeed Fed is a bit more hawkish by itself compared to expectations, and in general overall Fed position is stronger than compared to other central banks. And sooner rather than later this makes impact on the euro currency, and if we do not see strong action today, it may be a bit stronger on in a few next sessions, because the euro currency will have to cutting the gap with the dollar index and just trying to catch it. So that's why I think that, well, I don't see any reasons currently to step out from our trading plan. I still suggest that's where probably stand right now in a stage of the reversal. But here, as usual, you should act according to your mentality. How is more preferable to you personally? So for instance, on the 4-hour time frame chart, take a look what we have. Market has formed a reversal bar here, right? And if we suggest that these lows should be taken out, at least based on the chart on the dollar index, it means that market should return back to this support area right there. Correspondingly, since we have here 1618 butterfly, it might become the part of the head and shoulders. So if you do not want to take position right here, we're worrying that it might be some further upward action or some volatility, or it's not comfortable to you. In this case, you could do nothing. You could just wait when the market will drop back to 104.70. Then starting the pullback, and you will take the position around 105.70. It's not big difference compared to current level. The only thing that you need to do is to wait a bit. And then we could get this head and shoulders for position taken, because we're dealing with the big patterns, guys. Monthly Brent body is a really big pattern, and if you will take position 100 pips lower or 50 pips lower, it's really absolutely not the big deal. That's for those who are more conservative and who would like to get more confidence, more background, bearish background for position take. If you see that you theoretically could try to take the position right there, trying to take the possession right there, take a look what we have on hourly chart. We have something like that. Actually, we have the widening triangle right there. It's already in place, and mostly direction will depend on the direction of the breakout of the extreme points of the widening triangle. I would suggest that we could get a kind of the, maybe let's call it the diamond or something of that sort, this narrowing consolidation. This market could show relatively wide swings inside of it. And for position taken, if you would like to take short position here, you could watch for levels around 106.80. This is 618 resistance of the whole downward action. It will probably be completed, because take a look, market has formed here with the bearish reversal swing. And in general, this range is starting from the 106.65 and until 106.94. So it's just two different targets of this minor ABCD. This OP and XOP stands slightly higher. Probably you could treat it a bit differently, so it's not will be the mistake if you consider it in the way of the probable head and shoulders or something of that sort. So it might be the left shoulder, spike head based on the Fed, and right shoulder. If market will break 618 level and coming back to the top, that will tell you that something wrong with it. It means that market either will spend more time in a sideways action, or it even could try and take out of top and keep going higher on some based on some momentum or something, until market will stand inside of this swing and just showing this narrowing consolidation. Market keep chances of the starting on the downward action right there. Another reason why I think that downward action could start right from here is just because take a look on the weekly chart. Market stands in the wide confidence area, and currently it hits the weekly overbought right on 1746 resistance. So it will be really problematic for a market right now just break it out and keep going higher, because it's not sufficient background for that. That's why I think that's, well, it could flirting a bit around, but in general somehow I suggest that odds stands in favor of the downward direction here, but you need to choose the way of action trading that is best fits to your personality.